trading is supposed to be boring. It's not supposed to be this, lights in a casino feeling. One of the big things that I'm big on is transparency. I show my broker statements. I don't claim to make 10,000% per year or anything insane, but I have been able to beat the S&P 500 pretty consistently over the last 5 years with the systems and strategies that I build. People ask me this question sometimes, and you might have seen this. I always find this funny. People will ask me, Nick, what's the easiest beginner chart to start? And I'm like, man, if you find one, you let me know, because I would love, and so would every other professional trader in the world, would love to trade the easy mode chart and just dominate that easy mode chart. I think a lot of people blame trading psychology for what's holding them back in their trading. Trying to convince yourself to trade like a robot and to not have any emotions or feelings, I think is wrong. I think that the better approach is to acknowledge that you're having those feelings, but to really focus on your actions. Most people are after that amazing holy grail system, whereas, I think really the secret, the real holy grail is realizing.
All right, folks, here we are on Trading Up. We've got trader Nick in the house from A1 Trading. This guy's been around for a long time. I can't wait to interview him. He's trades pretty much everything, and he's a very transparent trader. So we're in for a treat here today. So, Nick, welcome to the show, mate.
Hey, Cam, it's good to be on with you, man. And thank you for the kind introduction, but you as well. I mean, I've seen a ton of your different podcast interviews and love what you're doing for the trading community. So I'm happy to be here.
Well, awesome. Look, let's dive in and find out how you got started with trading. Where did it all start? I'm sure you probably told the story a million times, but for my audience may not know.
Sure. Yeah, no, it's always a fun one to tell. I think everybody kind of has, it's always an interesting question, because it's like, how did you stumble into this chaotic thing we call, trading and financial markets? And, it's for most people that, go the distance in trading. Trading is an absolute passion for me. Investing, financial markets, it's one big puzzle. And so I've always liked puzzles and figuring things out and building things and being creative. And so trading and the content space around trading really is kind of home for me. But it, was something that I stumbled into because initially my dad years ago, was interested, he still is to this day, interested in the financial markets, specifically stocks. And so years and years ago, he was showing me stock charts that he was looking at. And I thought it was, initially not too interesting. That was until I created an account. And once I started to see the dollars moving up and down, things instantly got more interesting. So I remember, years ago, watching like Snapchat IPO hit the floor, which this was probably first couple years into my trading. The first year, I'd say I didn't really take it seriously. I was doing other things. I was finishing up high school, so that was nearly 10 years ago. I didn't really take it too seriously, but then this one event really got me hooked into paying close attention to the markets, which was an IPO for the notorious social app Snapchat, ticker symbol Snap. And when it first came out, I remember seeing it go straight to the moon and then dropped for a couple years after that. And I don't think it's really moved too much further than where it is since then. But, the early days for me, I got into stocks and learning about businesses and kind of full circle. I've kind of come back to a lot of my focus being on stocks and specifically indices. But I really just got into it because, again, my dad was into it. I had a couple friends that were into investing and looking at stocks. So I started out on a fundamental financials, understanding companies and what makes them, great companies. And so I started in that world and then eventually went into my school major. I went to school for software engineering and implemented a lot of what I was learning at school into my trading, which brought me to possibly the easiest platform to get into for programmers, which is MetaTrader, because in the US, we can't trade CFDs, contract for differences. In the United States, that's something that's illegal to us. So we can only really trade Forex. So I got into MetaTrader because the programming on there was so rudimentary, elementary, so basic. They had a great environment in there. They still do for building scripts and indicators and expert advisors. And so I wanted to start using my computer science degree, put it to work in trading. And I just really got enthralled, absolutely loved learning about back testing and building systems, and building robots specifically was something I was really interested in doing. And so I was using my computer science degree at school, and then at night I was writing code and trying to find systems and strategies. So that's really where I got my background in trading. Was I jumped over to Forex because the platform I was in was so built for Forex. MetaTrader for US traders is very heavily, centered around the Forex brokerages to US citizens. So I've jumped around over time. I trade a little bit of everything. I know we were talking about that just before we got into conversation. I trade a little bit of everything nowadays. I have a really big focus on building software tools to this day for my trading. And I have kind of moved back to where I once started, which is the fundamental side of things. I'm very heavy on macro, studying the economies of the world, studying, if I'm looking at companies, stock financials, all that sort of stuff. And I'm primarily a swing trader and a position trader, and I trade a very wide range of different assets.
Well,
you've probably heard me talking about trading with confidence. And honestly, it's a lot easier when you're not risking your own money. That's why I wanted to mention Blue Guardian. They offer instant funding or a challenge to get you started and up to $400K in funding, weekly payouts and a 90% profit split. And they've already paid out over $15 million to traders around the world. Plus they're sponsoring Birmingham City FC and Chris Eubank Jr. So they're serious about backing performance. Check them out at blueguardian.com or check the link in the description.
Yeah, it's funny. You actually sound a little bit like me. So I dove into the whole MetaTrader EA space for a long time and was building out robots and trying to find the holy grail there. I had some success along the way, as people do. But it is a hard game to get something that's like consistently going to be able to adapt like a human across time. But they are useful for building in, like, I suppose, boundaries to your trading or helping you identify things outside of just working on their own. Unless with AI, maybe it does change the game.
Yeah. And, just to add to that, like one of the biggest things that I learned programming, and this was the biggest blessing in disguise, Cam, that I could have ever asked for. And you probably saw this too when you were programming robots. It does not take long to realize how hard it is to build a system that is resilient across many market environments and not blow up. And the reason I say that was a blessing in disguise is at the time it was very frustrating, as you probably found too. It's like it's hard to find this holy grail that you keep hearing everybody on social media talk about, and how cool it would be to have a system that wins all the time. You're making 60% a year, and you could sit back and watch your money go to the sky. And it's just very difficult to actually build. Like if you actually start learning to program and to build robots and try and programmatically build a system that is purely mechanical, what you find very quickly through back testing and building systems is that system doesn't really exist. And if it does, it's for a specific window and period of time before it blows up. And so what I found through my many thousands of things that I wrote code for in MetaTrader, what I found through that was the biggest blessing in disguise was it's hard to find a system that is unbeatable. And instead, what I settled on was good trading systems are just decent trading systems with good risk management, and anything that is producing more profits than losses, even if it's a small amount, compounded over time, can be a great system. It's just, most people are after that amazing holy grail system. Whereas, I think really the secret, the real holy grail is realizing great profitability just comes from steady, consistent, small gains.
Yeah, I think that, the holy grail stuff, it can work if you've got like a ridiculous stop loss or no stop loss. And I've seen people do that, grow accounts massively, but the long-term result is it will blow. Right there, it's 100% guaranteed it's going to fail at some point. Yeah, you might make a big amount of money, but eventually that drawdown is going to come back and suck you up and eat you up. So you also do options. You do you moved into Forex. What sort of surprises me is you've got such a broad, stocks as well, range of markets that you look at. How does somebody get to the point where that becomes easy?
Yeah. So I don't do a lot of other things for fun. Like trading and investing genuinely is like, it was a hobby for me and it still is, even though it is, my profession now. It's still something that I absolutely just adore. It's fun. Well, when it comes to building out different strategies, one of the big reasons that I've moved in that direction is we're kind of getting to the crux of it with this conversation already, which is you find systems that work really well in certain environments. Like trend following systems in 2025 have been really solid. Like momentum has been a winning strategy for 2025. But not every year is momentum a winning trading strategy. Sometimes momentum really stinks, like choppy years and sideways markets. And what you might also find if you start looking around is different assets and asset classes tend to behave differently. Not everything trades like gold or the NASDAQ. Some things trade more range bound. Some things trade, with less of a bias to the upside. So there's all sorts of different things, and just studying markets, you realize there's many different systems, strategies, and asset classes that can kind of be played with to build a diversification of strategies. Now, I don't have a ton of trading strategies. I have a momentum focus strategy, which is very much trend following, trailing stops, with a layer of macro fundamental analysis in what I do. That is probably what's most popular to watch on YouTube and interesting about my channel. But I also do, longer term position trading in both FX and individual stocks, which is more, a little bit more mean reversion focused, a little bit more looking to buy low, sell high. And then I have a strategy that, again, is more commonly the more interesting one on my YouTube channel, which is buying high and looking to sell higher, or selling low and buying back lower. So I'm very much a momentum trader in terms of what I do most actively. And in the longer term, I have a few strategies that are very much mean reversion based. So, what's nice about that is that it smoothens out the equity curve. At the end of the day, like my whole portfolio, I look at my whole portfolio as a holistic approach. I want to generate some sort of positive returns, no matter the environment. Now, the whole portfolio might have drawdown, but I like the idea of having a system that works well in different environments, so that as it's rotating psychologically, it's nice to have something working at any time, but it's also helps to smoothen out the very sharp drawdowns that a pure momentum strategy might have. So I have a couple strategies to help even out, returns or equity. But then also when it comes to options, you mentioned that briefly. Options, for me, the beauty in options is that I tend to really like to look for opportunities to sell options for premium, a very boring, straightforward strategy, looking for spikes in the VIX like we're seeing recently. It's an opportunity, in my view, to look for opportunities to short puts or covered calls if the market, I believe, is overbought or something like that. So what that does is it adds another layer. There's some built-in edges that are quite nice in terms of selling options for premium. There's numerous studies that I would encourage listeners to go look into when it comes to option selling. The sellers have the edge, not just because buyers are dumb, but because there's inherent, when you're selling options, there's inherent unknowns. There's tail end risks that the seller of options picks up and collects in the form of premium. So I do some option selling. I do momentums trading. And I'm very much not a day trader. I'm not a scalper. I'm not a day trader. These strategies that I'm talking about are not, 47 executions a day. They are, I could do everything that I do in my trading in an hour or less a day.
Right. Yeah. Because that's what was going to be my next question. Because it seems like, for me, I trade one market. That's it. One market.
Yeah.
And very different from you, so you say you can do it in an hour a day. How do you do it in an hour a day? And at least, I suppose, identify which stocks you're going to be trading or even investing in. And then what, are you going to use options, or are you going to just buy and hold, or how do you even do that in an hour?
Yeah, no, that's a great question. So if you would like, I can share my screen, maybe just walk through a little bit of what I'm looking at. Totally up to you if that works.
Yeah, well, I mean, I'll tell you what, we'll dive in and do a screen share thing later. But I mean, if you
Okay.
do want to do one
I'll
now,
give you a high level.
yeah, do a high level one now.
Yeah, for sure. So in terms of how I execute it all in a day, goes back to where we started with in terms of my background in software engineering. Everything that I do, I have a system built to help me. And obviously, if you hear a sales pitch coming, it's because there is one. I sell this stuff. I mean, I love making YouTube videos. I love trading, but I also, sell the stuff that I build. There's nothing magic box or, proprietary magic system that I sell, but I have screeners and tools that help me. And many traders see them in my videos, and it is totally a business. I have 10 people that work for me across everything that we do between the content, software engineering stuff. So I've built out kind of what was my college dorm room, trading systems and strategies into a team, which, I think is fun and cool. And specifically getting to your question about like, how do you spot these opportunities? Well, I trade very heavily off of momentum on the price side, but also on market sentiment. So looking at what the crowd is doing, looking at extreme fear, extreme greed, all these sorts of things that many traders are probably familiar with, looking at the Commitment of Traders report, looking at 13F filings to see what institutions are doing. And I use tools for all of this. So I use software that automates the analysis process to help me scan this data. And then I have kind of this, I call it semi-automatic because I'm not letting like a robot do everything for me. But I have many tools that are automating the screening process and giving me something to look at. The other side is the macro, which macro is scary to a lot of traders because it sounds big and scary and needing a PhD in economics to make it work. And you kind of do, but with the right tools, again, there's my sales pitch. We build tools that help to simplify the process of scanning markets. So NFP reports, CPI, PPIs, these can be reduced down into simple charts and graphs that can also generate trade ideas. That's what we do at my company. We build these tools and I use them in my trading. You mentioned earlier, like one of the big things that I'm big on is transparency. I show my broker statements. I don't claim to make 10,000% per year or anything insane, but I have been able to beat the S&P 500 pretty consistently over the last 5 years with the systems and strategies that I build. I don't sell a course. I don't have, education is not something you pay for with any of our stuff, but I build the tools that I actually use to generate the results that I do. So that's a little bit in terms of how do I do it in an hour and a day? Well, I trade the daily and the 4-hour chart. So I'm not like low time frame. So I'm not getting 37 technical signals per day. I watch a selection of charts, which may be a lot per se if you were to manually watch all of them. But because I have tools, it really comes down to like, let's say I have, let's say that there's 35 to 40 different symbols that I watch each day. In reality, maybe 4 of them or 3 of them are actually getting bullish or bearish signals within my system. So I really have 3 to 4 charts. If you think about it, if you only had to monitor 3 to 4 charts for setups, an hour a day sounds like a lot of time to do that.
Yeah, exactly. I mean, I suppose the whole software thing just makes it simple. I mean, if somebody was going to, I suppose, if you're going to recommend an approach for them, given the fact you've got all this knowledge and experience across all these different markets, somebody comes to you and says, "Hey, Nick, how can I become a trader and become at least profitable in something?" What would you recommend?
Yeah, so I think that for me, macro is something that is very high level and scary to a lot of new traders. I think that in terms of the quickest way to improve as a trader, I always say is in the risk management side of things by just reducing trade size. I think that if you trade with like a minimal trade size, a lot of the things that are initially holding back traders for the first couple of years, which is seeing your account swing by 30% every week, that is not going to be sustainable. So what I really, really think people should think about doing, this is something I did that changed my life, and credit to somebody I used to watch many years ago. You might know, you might not, but his name was Rob Booker, and he used to be on YouTube.
Yeah.
And yeah, classic Rob Booker.
Yeah, I've had him on the show years ago. Yeah,
Rob Booker, fantastic guy. He's kind of retired, moved away from the trading education world, but still trades on his own. And what he would always say in his videos that resonated with me and changed my trading trajectory really was, everyone's so focused on making like $1,000 a day, whereas he was really focused on talking about making $1 and keeping $1 and just keeping your position size very, very small. It erodes away a lot of the psychological side of trading. I think a lot of people blame trading psychology for what's holding them back in their trading, when I would argue it's most likely risk management or a lack of an edge in your system. Those two things, I would say, dramatically outweigh the importance of trading psychology, because a lot of times people use the concept of trading psychology to excuse their gambling habits. So to me, it's, if you trade stocks, trade with one share. If you trade Forex, trade 0.01, trade one mini contract on futures, whatever you do, trade the size for a while and watch what happens to your headspace. It's way more clear, because you're like, okay, this is boring. And you're like, oh, wait, that's what trading's supposed to be. Trading is supposed to be boring. It's not supposed to be this, lights in a casino feeling. So, I would say reduce position size is the quickest way to improve as a trader, because then you can start thinking logically about your system and not so much about your P&L.
Yeah, and if you can get that consistency with that low risk, then you're doing something right, and then you can think to up it and that kind of thing.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
So, okay, right. So that's sort of step number one is reduce, your risk. If you sort of had to recommend a market to go for, what market would you say?
So I think that people ask me this question sometimes, and you might have seen this. I always find this funny. People will ask me, Nick, what's the easiest beginner chart to start? And I'm like, man, if you find one, you let me know, because I would love, and so would every other professional trader in the world, would love to trade the easy mode chart and just dominate that easy mode chart. I would say that experiment. There's no such thing as a chart that is easier than others. In my opinion, you can trade the NASDAQ, you can trade the S&P 500, you can trade stocks, you can trade currencies. Whatever you trade, though, I would say make sure it's liquid. That's a big thing. Make sure you can actually get filled on whatever you're trading. If you're trading something that's like super spready, that can just make your trading costs, massive. So trade something liquid. If you're trading options, SPX options are super, tight. You could trade SPY options if you're trading Forex, euro, dollar, pound, dollar. I think that really there are many different things out there, and you don't have to trade everything like I do. You can find something that you specialize in and get to know that thing very, very well. I actually am a big proponent of if you stare at charts long enough, it's hard to explain what it is other than the word intuition. You build intuition on charts that you study really closely every single day. If you are a gold trader through and through and you stare at the gold 1 hour chart, I like to believe that you are going to start picking up on some tendencies of how gold behaves. So I think that you can specialize. In my case, the reason I trade so many things is because it's all tied back to a central piece of my analysis, which is the fundamentals, the macro. So, if I'm looking at the economy, the US economy, for example, and I feel I have a pretty good pulse check on the state of jobs, inflation, GDP stats, growth metrics, et cetera. If I have a pretty good pulse check on that, I feel that from a fundamental perspective, I'm able to go trade gold with a understanding of the dollar, with an understanding of, I can also look at US stock indices and feel that I have a good conceptual basis of what's happening in the US economy. And that drives a lot of my bias and stop or go signals within my system. So that's why I trade so many charts, is because I really trade what's happening in the macro, what's happening in the economies of the world, what's happening with the Federal Reserve. I'm very focused on that stuff because I think that's what really drives markets. And so I try to keep my finger on the pulse when it comes to fundamental analysis. Again, may not be for everyone, and it's very high level stuff in terms of, if you don't pay attention to that stuff, but I actually love that stuff. Like I find that very, very interesting. Why is the Federal Reserve choosing to cut interest rates? Why are they waiting? Why are they, what's the situation with the jobs market, and keeping an eye on that? I mean, that's the stuff that I always say, if you think the fundamentals don't matter, just pull up an NFP report, at 8:30 a.m. Eastern. You tell me how much that didn't matter. It moves the chart big time because it does matter, and because big players are really caring about what that tells you about the broader theme of the US economy. So in terms of where can you start, if you want to learn fundamental analysis, the best way to do so is to read a lot of articles, watch a lot of content, listen to a lot of interviews with economists, with portfolio managers. If you ever turn on CNBC, you can listen to professional money managers who are very deep in fundamental analysis. They talk about it all the time. So there's many resources to start learning about macro if that's something you're interested in. And if you're not, find somebody that is credible. Whatever you want to do, find people who are credible and actually have done it successfully and can prove it. Most of the trading space will not show you a thing when it comes to, hey, do you actually make consistent money in the markets? They will give you crickets, or they'll say, well, I trade live, so that counts. And it's like, no, it really doesn't. Broker statements count. That's it. Live broker logins. I'm big on that stuff, not because I'm bitter, but because, I feel for the average person who's trying to learn this, they've got like 30 minutes to an hour a day of free time after they get done with school or work. And I'm big on track records because I think that lets those people know, like if they're investing all this time learning from this person, that person actually has results to show for it, and not just wasting their time and trying to get their click for, monetization purposes.
Yeah, well, I hear you, because look, I mean, you like me, you've got a podcast, you've interviewed people, and you ask people that reach out to send you a statement or something. Give me 12 months of your track record, and
right.
I guarantee 99% of those people never reply back to me. So there you go, folks. When you're trading, are you sit and forget, or are you managing these trades on a 4-hour chart when what happens when you're asleep and that kind of thing?
Yeah. So when it comes to my trading in terms of activity, what am I doing day to day? So I'm not buy and hold at all. I trail stops pretty consistently. Like that's my preferred with my momentum trading style. I am really truly looking for momentum, looking for, you could apply some simple moving averages. I use some support and resistance levels. Essentially, I'm looking for charts that are trending well, that the fundamentals and sentiment indicators that I have also agree with. And then I am looking to trail stops. I specifically focus on the 4-hour and the daily chart because it suits my time availability. I also find those charts to be, personally, I find them to be cleaner, than the very low time frames, just based on my signals and things that I look for. But basically, my day to day is I have a system, like I said, that is sort of generating these potential candidates for trades. I pull up charts for each one and I look to see, are we in a strong trend? If so, are we pulling back to a level that I have marked up? If yes, take a trade. If no, move on to the next one. If I'm already in a trade, then I'm repeating that process. And I'll show you this if we look at a technical chart. I've got trades that I can pull up in examples. But basically, I'm looking to trail stops behind market structure and look for dominant trends to take part in. It's really a very simple procedure in terms of the technical side. I would say that 25 or less % of what I do is technical, and most of it is, scanning real world data.
So, like through your trading career, 7 odd years, you've obviously had some ups and downs. Can you talk us through some of those downs, or if not the worst down moment you had, where you were in drawdown, you had to come out of it psychologically? How did all that play out?
Yeah, for sure. So I think one of the double-edged swords to trying to be transparent in the trading space, and I totally understand why not everyone wants to do it under such scrutiny, under such openness, is because drawdowns are hard. Drawdowns in the public eye are excruciatingly painful. In 2022, I had a pretty rough drawdown. I just had multiple false signals, multiple losing streaks in a row. My stops, I've just had a string of losses that really stacked up and created a pretty substantial drawdown for me, which was, I think, about 30% on my account. And I did so at the same time doing my broker logins and pulling up my live streams. And so it was rough. I mean, to be honest, like that was very difficult from both sides of things. From my trading, it was just like, it is discouraging. It is defeating sometimes I'm not going to lie, like taking losing streaks is never fun, no matter how long you've done this, no matter how trusted you have in your system, it's still frustrating when you're going through that. So I had a pretty substantial public drawdown. I know 30% is not, deathly levels, but for me, it was a pretty big drawdown and was pretty frustrating. So in terms of how I dealt with it, how I recovered from it, I didn't change anything about what I was doing. I essentially stuck to my system the whole time. I gritted my teeth and I dealt with it. And it was not fun because, again, the drawdown, not fun, but the public kind of, everyone is a genius in the comment section, right? Everyone's like, oh, you clearly should have known this was not a good entry. You should have done this. You should have done that. Well, I stuck through it. And to me, it was very encouraging when I came out of that drawdown. In the time that I was in the drawdown, it was very painful, very public. Again, I think I had more losing months that year than I did winning months. And in 2023, the next year, things turned around. Same setups, same signals. It just the market conditions changed. Again, 2022, for context, was a pretty down year, and I was very much on the wrong side of a lot of risk-on setups. So a lot of risk-on setups, long tech stocks, long. I had a lot of options trades that were working against me, and so just a string of bad trades led to a pretty substantial drawdown. Came out of it, and I think that one of the things that when you have more years in terms of your trading, it is a huge advantage because you've gone through what you've gone through. Like that experience is a great teacher. And I think it's the only true teacher when it comes to trading. There's nobody can teach you or prepare you for that. Even with good risk management. Like I knew what I was doing. That was not my first drawdown. It was my first very public drawdown like that. But I knew what I was doing, and it still was very psychologically difficult. I think that, trying to convince yourself to trade like a robot and to not have any emotions or feelings, I think is wrong. I think that the better approach is to acknowledge that you're having those feelings, but to really focus on your actions. I'm not going to change what I'm doing. I'm not going to go place huge trades. I'm going to have like a system or a strategy to psychologically reset. During 2022, I was also getting married. So I had other things going on in my life, which kind of distracted me, but also they were negatively hindered by the drawdown. But I just found other things to do. I played a lot of chess in 2022. Right. Like that was my go-to online chess. I played a ton of chess. I went on a lot of walks. I just all sorts of other things, like finding creative other hobbies. I think for traders is really important because it can keep you away from the charts. If you don't have anything to do on the charts, you really better close them. It's better off that you go do something else. And so again, same system, same strategy, pulled out of 2022 and came out of that drawdown. So long story short, it was tough, but worked through it.
It's funny. Drawdown is one of those things that I suppose a lot of people just don't even factor in. Like, I think I had someone on the show ages ago who showed a chart of win rates and risk to rewards and eventual like drawdowns you could potentially have or losing streaks you could have. And it seemed like every single combination was going to have a losing streak of maybe 7 or 8 trades where you have to sit through 7 or 8 trades, even with a high win rate strategy, and suffer through those losses. My own mentor, JJ, he was telling me that what he did when he first started was he purposefully drew his account down by like 20, 30, 40% and brought it back up. And that was all he was doing. He didn't want to grow the account, just literally draw back out from drawdown. So it is such a good practice to do. And how he did it in public, I don't even know, because it's so hard. That's like making it doubly hard.
Yeah.
So well done on that. Talking about win rates, I mean, what kind of win rate would you say you have if you track that kind of metric?
Yeah, so I mean, goes back to what I said earlier in terms of trading style, like strategies. Because I have more than one strategy, my win rate is a little bit different for the different strategies. When you're selling options for premium, selling out of the money puts, selling out of the money calls, your win rate's really high. So when I'm doing the option side of things, when I'm doing the mean reversion side of things with a longer term, perspective there, I wouldn't call that necessarily like short-term trading. It is more like position trading. The win rate's really high. Now there can be periods of drawdown and where you're stuck in a trade for a while, but win rate's really high. So on that side of things, I would say 75, 80% plus in terms of win rate. Then on my momentum side of things, I'd say it's much lower. I don't have the stats in front of me, but basically I know it's sub 50%. I would say 44%. I did have, before I got kicked out of a CFD brokerage that I was mirroring my trades on, I think it was 4 years or so of performance. I think it was 44% win rate on my momentum strategy. And then the CFD brokerage lost access to MetaTrader, which kicked me out of the account. I did a video about it. The account did not blow up. I logged into it in the video, and I know it's always a question. They're like, "Oh, convenient, it stopped working." But no, they actually sent out an email. The account got detached from it. So now I just do the broker logins with the same trades just on my US regulated brokerage.
Hey, if candlesticks still confuse you, they're costing you more than you think. My private mentor JJ's decoded 25,000 hours of trading into one better candlestick. Click the link in the description or visit tradingnut.com to watch the free video and grab the free guide.
So I believe you've got quite a unique technique to, I suppose, identify big shifts or changes in any market. Can you explain that, like regime shifts where a market is just fundamentally changing its whole, I suppose, the way it's currently operating?
Yeah, I mean, so when it comes to the fundamentals, the big picture story, to keep it really simple, I look at 3 main areas. And my approach to macro or fundamentals, to keep it really simple, I try to look for the same things that Jerome Powell and team try to look for. So when the Fed is determining whether they need to hike rates, hold interest rates, or cut interest rates, which is obviously the borrowing costs for citizens. And of course, the ECB does this, the Bank of England, the RBA, the RBNZ, like all of them, right? They are looking at economic metrics to determine what they should do with their key tools, which are interest rates and their budget. So when it comes to the Fed, for example, they are looking at, whenever you listen to them talk, they are looking at their dual mandate, which is keeping people employed and price stability. And so that tells you the things that we as traders want to look out for. If you look at the biggest one-day average moves, I believe is a US CPI report, it makes sense because inflation is the gatekeeper to the Fed cutting interest rates, holding them, or hiking them. So CPI matters because that's a huge thing that the Fed looks at to determine whether they should cut interest rates. Cutting interest rates is like handing out money to everyone. So if you hand money out to everybody, it's going to flood through the system and companies are likely to do better. And gold is going to go higher because fiat currency is getting printed. Like these are real world forces that they sound scary when you hear people talk about like, oh, macro fundamentals, but they actually make logical sense to all of us if you start to just piece them together. Like we all know how it feels when gas prices go up a bunch at the gas pump. That's a real force that every person who has ever, filled up their gas, they know how that feels. That's a real world force that is exhibited in markets, and understanding how those key things impact charts is what I really focus on. So I look at jobs data, I look at inflation data, and I look at growth data, so GDP growth, et cetera. So having all those things, there's several metrics within each of those categories that the Fed is looking at. Services PMIs, manufacturing PMIs, inflation statistics like the CPI, the PPI, PCE numbers. Again, these big acronyms, they sound scary, but they're really just ways to measure inflation. We're trying to figure out, what is inflation going to do to interest rates? What is the jobs market going to do to interest rates? We're trying to figure out what the Fed is likely to do next. That's the game we're playing as macro traders. We're looking at the state of the economies of the world and determining which ones are strong, which ones are weak. Where's the path of least resistance? Where's the money going to flow? That's what macro traders are doing. And so, to me, that logically makes so much sense, because technical charts, while I find them to be great and useful in terms of my approach, I think they miss some of the full picture. I think that macro tells you the underlying story of the markets, and technicals are sort of it being written down. So, the story, the what's coming is the fundamentals, and the technicals are sort of a reflection of what's being heard from the market.
It's interesting. I've interviewed quite a few fundamental traders recently, and what I've found is that they don't tend to put much weighting on the trading mindset, trading psychology side of things. And you mentioned that, we touched on it a bit earlier on, and I've had a recent guest, Bernd, on the show, and he also has fundamentals as a core of his thing, and doesn't kind of like really, I suppose, have a lot of the mindset related stuff that he believes is going to help his trading. So have you got any kind of, I suppose, rituals or habits that you've built into what you do in your daily life that help with your mindset regardless?
Yeah. And again, fundamental traders sometimes get a bad rep because a lot of us think we're better than everyone else when it comes to trading land. And it's not true. I think that it's kind of the lens you choose to take. Like, I don't think a pure technical person is less knowledgeable than a fundamental person. But fundamentals really give me a lens to look through the markets that make a lot more sense to me, and helps me to explore like where I think things are going. So fundamentals, I think they get, the bad rep of, they're elitists to an extent. There's a lot of work that goes into fundamentals that I think that it does, kind of have some coolness to it, but it's not the only way by any means, I think, to find profits in the markets. But that being said, trading psychology, the reason I'm pretty anti-trading psychology, content and way of thinking, is not because I think it's not useful, but because I think it is overvalued in the retail trading space. I don't think it's useless. I think it's just overvalued. So where my comment section, when I talk to traders, I'm sure when you hear traders, if you ask traders, what's holding you back? Almost always they say, it's my trading psychology. It's I'm freaking out when I'm trading. I can't stick to a system. That is true. But that is true to everything in life. Like, you have to be disciplined. You have to be if you're going to do anything difficult in life, you got to have, discipline to do it. What's likely actually mechanically holding you back is that you are just throwing money around in the markets, and you don't have an actual system that's tried and true, back tested. Most people have never opened up back testing software in their life. Most people do not actually take the time to consider sort of a max drawdown that they should be expecting based on the rule set that they're using. Like you said earlier, where you had a guest who was kind of outlining, like, even if you had a 60% win rate, for example, and a 2-to-1 risk to reward, you can still have nasty drawdowns, even with an edge in your favor. Most people who approach trading have never actually gone through the thought experiments of, what if this all goes wrong? And instead, they never consider or prepare for the damage that inevitably will happen to every trader. Every single trader listening to this right now will go through losing streaks that are shocking. And if you are not prepared for, if you're not ready for the outlier losing streaks and drawdowns, you're much more likely to blow up and blame it on trading psychology. Whereas these things are preparable for. Like, you can actually test systems going back 20 years in data and say, what was my max drawdown through all of that? What should I expect? What is a reasonable drawdown? And again, not to say trading psychology isn't important. You got to have psychology discipline in whatever you do in life, but more so, most traders do not do any of the actual mechanical rule set testing, strategy building, etc., and then just blame trading psychology. That's why I think it's rage bait to people who are very experienced when people are just like, it's my trading psychology. But have you back tested? Never. It's like, okay, you're going wrong on this first step.
Yeah, and I kind of think that that's part of the psychology aspect of it, is you're just not even doing the back testing. Why aren't you doing it?
That's true.
Hey, look, Nick, it's been fantastic having you on and hearing what you do, and hope everyone's got a bunch of info from this. Now, we're going to dive into a price chart after this, folks, so do stay tuned. But what's the best way for people to find out more about you?
Sure. Yeah, you can just search me up on YouTube. It's Trader Nick, and I do live streams Monday through Friday and videos Monday through Friday as well.
Brilliant. Well, folks, what we'll do is hook a link up to all those below this video here or in the podcast description. Go and check it out. We're going to dive in, have a look at a price chart. You don't want to miss it. So hit subscribe, like, and that notifications bell, and we'll see you in the next one.